Hi, welcome to your Shipper Econ update. I'm Mike Vincent. He's Anthony Smith. What do we got going on today, my friend?
That's right. So we have a couple updates. So earlier in the week, Monday, not that early. So just yesterday, we're talking.
It was earlier.
It was earlier, technically. So earlier in the week, we're talking about what was going to be expected in the upcoming week.
Yeah.
We're talking about manufacturing. We're talking about retail sales. Of course, if you get the daily watch outlook, you get a little bit of a head start or a sneak peek of what we are expecting in the upcoming week.
Never miss it.
Never miss it. See, you're always in the know, so
That's
never
because
that doesn't surprise me
I
at
read,
all.
I watch, I subscribe to our
Consume this
newsletters.
stuff,
I know
exactly.
It's got to.
And so in our retail sales number, we saw that there was a 1.1 monthly downward movement. This was what we kind of expected in our outlook, thinking that, okay, last month we had Amazon Prime Day, all of the other e-com holidays, all the e-commerce stuff going on like that.
Right. There's less specials going on right now, you would suspect. Plus, it's summer, you suspect sales go down a little bit.
A little easing. So it's not going to be too surprising, like you said, to match an Amazon Prime month on a back-to-back basis. So that'll be difficult. And of course, so as we move on throughout the year, the consumer stamina is going to be tested. So we're seeing one of the big things that was really good throughout the economy, consumer credit rates. So continuing credit was easing, and it was very low throughout the pandemic.
It was.
Consumers were paying off debt, not using credit cards as much, not a lot of confidence. So consumers really kind of ease off the gas pedal on kind of extending credit. There is something we got to keep our eye on, though, and that's going to be those buy now, pay later things going on right now. So that could be kind of inflating right now and really kind of ramping up.
3 years, no interest.
Exactly. So that might come to bite a couple of us in the butt, and
Could.
and 12 months from now. So we're going to keep a close eye on that because that's very much a trend right now. So that could be an underlying thing as well. But overall, we did see that there was some downward movement overall for retail sales. Nothing too crazy. Yeah,
coming down off of extremely high. Is that not like we're pre-pandemic lower than that, right?
Exactly.
Okay.
And that's
still
the big thing. Year over year, still strong. So on our next chart, we're going to look at one of the big movers, of course, non-store retailers, looking at e-commerce specifically. And that's going to show what's going on overall for, of course, those Amazon Prime and all those other non-store retailers, as it notes. So what we saw there was that there was also a slightly downward movement there as well, but nothing that we're going to be too concerned with. The other chart here, Michael Vincent, I know you didn't think I was going to skip it. We're going to have it here. Bow try.
Thank you. You made my Tuesday.
Not going to miss an opportunity to talk about flatbed outbound.
It's never a good day until Anthony talks.
It's a rainy day. I got to bring it out. So
got to. It's like the sunshine.
Exactly. So what we're seeing here, of course, in the orange line here is our flatbed outbound tuna rejection index, my favorite, and should be yours too. And in the blue line here, we have industrial production, or else we have in the blue line industrial production year-over-year change. And so what we're seeing in the orange line here, because this kind of shows us what's going to happen ahead of time, because
it's ahead of it by it's daily.
Exactly.
And the blue, the industrial is monthly.
Monthly,
right?
Exactly.
So you get a full month of us telling you where it's going to go.
Exactly. And so what we saw here was that there was a 1.1 increase, 1.1% monthly increase. And so this is good news, showing that there is that moderation that we were seeing in that orange line that we were expecting. There's going to be a peak in manufacturing activity, and there's going to be some moderation as we move forward. And so this doesn't come as too much of a surprise. Diving into one of the big numbers here that we saw, machinery. Manufacturing for machinery increased 5.4%. So that's something huge there. On a year-over-year basis,
so that is considered really machinery that is being built to support more production.
Exactly.
Right? So that is a strong indicator.
That's exactly right.
Yeah.
And so when we're seeing those expenditures being put in for those kind of capital goods, that's telling us, of course, retailers or producers, shippers are expecting more a return on this. They're in there to make money. And so they're going to look at this they're in there to make money. So they're going to be here.
It changes my whole perspective.
Exactly. Life changing. So they're going to be making these expenditures in anticipation that they're going to be used. And so, of course, looking at this is going to be one of those canary in the coal mines. If you start seeing this drop down, manufacturers and all these other industrial segments start kind of peeling back, that's when you start to worry. When you're seeing this moderation, machinery still kind of going strong, good sign of momentum to come. And this is likely going to continue to moderate throughout the remainder of the year, likely ease in 2022, but don't see any signs of a crash or any kind of recessionary trends or hard landing in 2022, but definitely some slower growth here next year.
Excellent. So cautiously optimistic Anthony Smith on this fine Tuesday. Thank you so much for that, my friend.